story that has been hitting your social media feeds, your newspapers, your television channels, and we continue to track here and help you understand what are the latest developments all about. We're talking about BYJU'S, the EdTech giant, the embattled EdTech giant, from where the bad news just doesn't stop coming. And in the latest, what we understand is that over $400 million worth of shares were sold by BYJU'S founder Byju Raveendran since the year 2015. However, Byju Raveendran has gone on record to say that all the money that was received with the sale of these shares was reinvested back into the business. But the fact that, and bear in mind, it is not just Byju Raveendran, shares were also sold by the other two proprietors or the co-founders or the board members of BYJU'S, which is Byju Raveendran's wife, Divya Gokulnath, and Byju Raveendran's brother, Riju Raveendran. All three of them sold hundreds of thousands of shares worth millions and millions of dollars, and they say that all of those millions and millions of dollars was actually reinvested back into BYJU'S. Kartik, talk to us. If they were reinvested back into BYJU'S, how is BYJU'S where it is now, and why didn't BYJU'S put money into the Provident Fund accounts of its employees?
Totally. And how hard would it be now to believe anything that comes out in an official statement from BYJU'S, given the fact its books have not been audited for the last 2.5 years? How do you believe anything that comes out from there? And why would one be forced to believe that this was not a case of profiteering? This was not a case of exiting the stake that you had, a part of the stake that you owned, just to pocket money. So I would look at anything that comes officially from BYJU'S with a lot of suspicion until its books get audited. Remember, Deloitte had resigned as BYJU'S auditors about 10 days, 15 days ago. BDO has come now, and I think the whole process of reopening those books of accounts, the financial statements, and looking at the reporting that should have been done and has not been done will throw more light on whether this $408 million was reinvested into BYJU'S at all or not. But if it had been, and the company statement says that the promoters of BYJU'S have reinvested the entire amount raised from secondary sales into the business for purpose of scaling it over the years. Now, scale is something that BYJU'S has achieved, and let's face it, it has grown as a company from 2015, ever since it got formed and started operations, till as late as 2021, mid-2022, until it was still acquiring Akash, it was still adding customers, it was still expanding White Hat Junior, it was still expanding online and offline courses. But the fact of the matter is that it still has a $1.2 billion loan on its books. If this money was reinvested, it pretty much suggests that the money was not particularly put to good use, because whatever it would have been invested in right now is in the grip of a lot of controversy. It's in the grip of bad loan. It is in the grip of brand ambassador Shah Rukh Khan ditching the company and walking away.
I have a question. Talking about $400 million, how much did they pay for Lionel Messi?
I don't know.
I'm really curious
numbers, but it has to be a good chunk of those $400 million.
Yeah.
So so that is where we are, and I think there's a long way to go before BYJU'S is able to win the trust, win the confidence of not just its customers and the students and parents that subscribe to the courses BYJU'S offers, but also the market as a whole, the investor confidence, the partners, the board members, the auditors. I think it's a long laundry list of people and institutions that still have to wait a long time before they're able to pin their hopes on any sort of recovery or growth for BYJU'S.
Right. Amit, talk to us. You've been tracking BYJU'S as well. One is that we still don't know for sure if Shah Rukh Khan is signing off from BYJU'S. But that is another news that's doing the rounds. But bear in mind, there's no confirmation on whether Shah Rukh Khan is discontinuing his association with BYJU'S. But the latest in the form, the question here is that you have an auditor who has left. So there is clearly so many questions on the financial, how money was raised and used in BYJU'S. At a time when it's looking for a $1 billion loan, news of a $400 million plus share sale which was never officially announced by either the promoters or by the company, it can only increase suspicion on BYJU'S, albeit them making it clear that now we took this money and we reinvested back into the business, although there's no clarity on where it went into the business. I mean, if most of it went into Lionel Messi, then again the questions will be raised all over again.
About Messi, it has to be more north of 4 crores per annum, which they paid Shah Rukh Khan back in 2017.
Wow.
So I believe that. Two, I believe these are bandaging tactics, basically. Till the time the audits are done, as Kartik mentioned, you cannot believe anything anybody says. These people can say anything because their books and they've not been audited. Deloitte accused them for not getting these audited since 2021. So financial year 2021, financial year 2022, and now financial year 2023-24, which we are in. So it is 3 years that their books have to be audited. All this time, all the money, where it went, the situation will be clear after this new auditor actually releases the audits.
And that's a huge part of the BYJU'S. 18 months. They submitted their first audited statements of a particular financial year 18 months after that financial year was over.
And despite that, Deloitte had raised concerns. There were certain corrections required in those financial statements that never came for a good 2.5 years. So FY22, FY23 books have not even been submitted for auditing, and we are already in FY24, and the corrections sought for FY21 have not yet been made. So I don't know what corporate governance we are talking about here.
And how can we believe them that they reinvested the money?
Them. And now there's this whole new debate, Krishna, which I am not completely in agreement with, but because it's out there, and even more respected startup folks like Nitin Kamath of Zerodha have come out in support, so to speak, soft support of Byju Raveendran, stating that the responsibility of corporate governance and the responsibility of audits and the misgivings in an organization, in a startup, should not be the responsibility of the promoters, founders alone. And even the whole VC ecosystem needs to take that responsibility, take that accountability. But I beg to completely disagree there. Whose company is it? There's a difference between the promoter, the founder, the CEO, and those who are operationally responsible for running the company, and an investor who has just parked money for, at the end of the day, profiting out of the increased valuation of that company. You've given cash to a company, you've invested, you have taken a stake in that company in the hope that the managers of that company will make the company grow, and you will be able to walk out with handsome profits. It's pretty much like people like us, the retail investors, invest in a stock of a listed company,
hoping that the stock goes up.
How's it any different? We are investors in that listed company.
We're not responsible if the company is mismanaged.
Exactly. Our money is getting deployed for growth. Our money is getting deployed for greater profitability, scale, etc. At the end of the day, we are not responsible for running that company. The managers are responsible for running the company.
Absolutely.
And
exactly the view. There are two views. We spoke to, Kartik knows, we spoke to Mr. Sanjeev Bikhchandani a few days back. He's of the opinion that the buck stops with the promoters because they are in the boardrooms. The venture capitalists and all that, they put the money, they put their backing, but they are not the ones who are in the boardrooms making the decisions. So there are two views on that. Like Zerodha said, the total responsibility does not rest with them. Another section believes that it does rest with them.
Yeah. As usual, I find logic in both the arguments. One is that I have my concerns on the VC ecosystem per se, because there's a lot of ambition over there. There's a lot of ambition to make a lot of money and make a lot of headlines too, so to speak, in terms of backing the next big idea in a market like India. If it takes off in a 1.4 billion strong market, anything can happen. So there is a lot of hyping up, and fact that Indians are good at adapting to technology, adopting technology, and adapting to technology, good English skills. All of these are great macro factors and good. We've been knowing this for many decades. But there is a problem in the VC ecosystem if you see the rate of startup failure in India, Kartik.
so, Krishna, my point again comes down to the fact that the VC is there to provide you growth capital. It is there to invest big sums of money in your idea, in your business, in your innovation, in your technology, for that to scale holistically. And then at the end of the day, the VC is able to walk away with a handsome share of profits or valuation, as the case may be. I think it is not different from any other bank which lends you money for you to grow and the bank to get a return on their investment or the risk that they have taken on you. Now, does this fact that VCs invest large sums of money as growth capital make them responsible for corporate governance?
No.
Unless they occupy those board seats and unless they are put in the driver's seat, I don't
Absolutely.
think they should be held accountable at all.
Fair enough. For BYJU'S failure, you can't hold the venture capitalists accountable, but the overall problems within the startup ecosystem in India, which is sort of exacerbated with instances like BYJU'S coming out, you're seeing a lot of bad money chase a few bad ideas, and then this question's raised on startup culture. Are we doing the right thing? At the end of the day, if we don't make a profit, there is no business. But then there are businesses which won't make profit immediately. We're going to be talking soon in the show about Kia, which finally made profits after 4 years of existing in India. So when you come talk about investing, you're going to invest in an idea where you're not looking at immediate profits.
So, Krishna, I believe, any decision could be stated right or wrong in hindsight. When you're investing money or when you're starting out a venture and you started out with an idea and that idea requires funds to flourish into something more tangible, it's very difficult at that point for anybody to understand how great a scale can that idea achieve. And it's only when it achieves that scale you realize, hey, it was a great decision. And only when that scale diminishes you realize, oh, maybe it wasn't a great decision. To, let's say, the defense of BYJU'S, I don't think it was a bad idea. I think the market proved that the idea was good, the idea was timely, the idea was required given how, the 2016 onwards run that BYJU'S had up until 2020.
Right.
It was ready to grow at scale and take advantage of the schooling from home pandemic scenario that the whole world was right in the midst of. So the idea was great, no doubt. And I think if you ask Byju Raveendran if he would want to do this again, I think a definite answer that would come from him would be, yes, I would do it again.
Yes.
So we've also got to be cognizant of the fact that days of easy money are over.
Right.
You don't have a very vibrant startup investment ecosystem right now because of whatever has happened in the world. Whether you talk about the Russia-Ukraine war, whether you talk about China's zero COVID policy, whether you talk about inflation in the US on account of these two and the Fed trying to increase rates to hammer down inflation, investors are finding safer haven investing in US Treasury as opposed to riskier startup business because the US Fed has never defaulted. And the chances, high probability of defaults in startups and Indian startups is high. Like you mentioned, 9 out of 10 startups fail. But it's not a bad idea. It's bad governance.
Right.
I think at the end of the day, the technology was great, the stack was good, the curriculum offered was good, everything was fine. But you ran into a mis-selling, which was by way of ridiculing students who would otherwise have been average plus performers, but calling them names and saying that, they're not going to make it in life unless you buy another 3 courses from me. Hard selling them laptops and tablets, which were priced more expensive than what the market was offering. And overall spending great loads of money on advertising, brand ambassadors, to a point that you had a $1.2 billion loan book. Your books were not audited, you had to let go of 3,500 employees, and you find yourself in the mess that you are in. So it was a great idea, but again, horrible governance. And that is what needs some sort of penalizing on account of the founders.
Absolutely. It's, even as you tell the story, Kartik, it's a story of two halves. It began so beautifully. It was so much social virtue in launching a product like this. And even that social virtue still continues. That's the fact of the matter. We might be in a post-pandemic world, but let's face it, it became famous during the pandemic because everybody was sitting at home and they needed education to be done at home. But in a post-pandemic scenario, so many people don't have access to schools. There is that demand that can be met. There is a demand for homeschooling that can be easily met with the Edtech, so to speak. So the opportunity wasn't necessarily the lockdowns and the pandemic. Edtech has a long-term opportunity in India. And my only concern is that the way it's gone so far, it's been a clear mistake when it comes to the pace at which they want to scale things up. Had they been a little bit more patient, had they, taken all the phenomenal growth that they got during the pandemic with a pinch of salt, knowing that this is not how things are going to remain forever. Lockdowns are not going to remain forever. Pandemic is not going to remain forever. Your numbers are not going to remain this forever. You will have a plateau period in between until the idea fully reaches its fruition. I think that's where it went wrong for BYJU'S.
You're right, Krishna. Absolutely. I think you've hit it on the nail. But again, I just reiterate, any decision, whether it is to do with scale, growth, expanding into other business ventures, territories, is right or wrong only in hindsight. I think at the moment at which those decisions were taken, obviously the intent would have been to make the company only grow higher and faster than where it was. And again, of course, about the opportunity of the COVID pandemic not staying forever and the lockdowns eventually ceasing, I think BYJU'S had, in a sense, tried to navigate that uncertainty by investing in an offline tuition coaching center called Akash. That if one business goes down, there's another one.
Yeah.
Or White Hat Junior, that hey, we are offering regular curriculum, let's just increase and sort of expand our offering into coding as another business. Which, so I mean, one complete offline Akash, one complete online regular curriculum BYJU'S itself, and one coding White Hat Junior. I think a decently spread out business venture, if you ask me. Enough mitigation of risk at all three levels, but unfortunately here we are today.
Right. Unfortunately, here we are today. We'll have to wait and watch how things pan out at BYJU'S going forward, because BYJU'S' audited books are yet to come out, even as we speak about their share sale of over $400 million.